Welcome back to the channel, everybody. Thank you guys for tuning in. Today we're going to be talking about how you make money and what to do with that money. Don't forget to smash the like button and subscribe to the channel if you haven't already. Well, let's get straight into it. Now let's talk about how we always make money. You know, it doesn't matter how you make money. You could be mowing yards, doing yard work. You could be at a full-time job. You could be delivering groceries, or you could be doing Uber Eats. You could be driving for Uber, dropping people off, and it doesn't matter how you make your money, guys. The only point is that you make money. Now, what do you do with this money? Now, I can give you a ton of examples about how people use their money in a less effective way that's going to keep them in the rat race and keep them trapped in the situation that they are in. Instead of having a new car, instead of, going out to eat all the time, instead of buying those new shoes, buying new designer stuff, use that money in a different way. We shouldn't be using money like that. Guys, remember, I don't know about you, but for me, I really want to be financially independent so that I don't have to show up for work. I don't have to, do things I don't want to do because I have to, because I'm working for money. Things that we have to do is we have to invest our money for income. So like I said, we get money, and then what we do with that money should be buying income. Now, how do we do that? It's most likely confusing to you what I had just said because we are not programmed to do that. We are programmed to go to school, get a job, and then consume. That's it. Every time you go into a Target, right, you're in line to buy something. Now, when are you gonna come to terms with the fact that, maybe I should be on the other side of the cash register? Maybe I should do something, provide a product or service where instead of me being in line, I'll have people in line coming for me, giving me their money. Starting a business, this is the fastest way that you could get money, period. The other fastest way is probably, obviously working at a job, but you would want to have a side hustle on the side because you want to start thinking and start putting into action, having customers and having people give you their money in exchange for a product or service, guys. This is what you got to do. Then once you get that money, like I said, it doesn't matter how you get it, but once you get it, then you have to put it into assets. Remember, according to Rich Dad Poor Dad, an asset is something that pays you and a liability is something that takes money away from you. So you want to put the money that you make into assets that pay you off something back. For an example, if I have $10, I could go literally on the stock market and buy a share of a company for $10 that would pay a dividend. Now, if this company pays back 10% of all its profits to its shareholders, then that means that you get $1 back every single year that you hold that one share. Now, there's a lot of examples of different companies that pay, different dividends. This is what it's called. It's called getting dividends. But the whole concept of it is very simple. You give your money to the company that makes profits and that will give you back a certain percentage of their profits. It's really not that hard to understand, and it's really not that hard to do because nowadays you could literally pull up your phone and hit buy, and you could buy one share of a company and then start getting passive income and start getting paid income from the money that you used from working. Now, I'm just gonna show you exactly all of my dividends that I'm getting paid. And guys, remember, the stock market isn't the only way to get, a profit back on your money without doing essentially anything. But the stock market is probably, I would say, the only true form of passive income. You can compare it to, having real estate, and you could put a renter in your property and they owe you rent every single month, which in turn means that you're going to be collecting a profit from the investment that you made in the property. Or I would say, business is not really passive at all. Once you're getting everything up and running, it's not passive. But if you have it automated and everything's in place and you have a team and you hire people and you don't have to be there anymore for it to make money, then that would be considered passive income as well. But obviously there's a lot of work that has to be put in up front to get that initial passive income in the long term. But stocks, I always talk about stocks because it's that easy just to jump in and get into the game and just buy one share, guys. There are, like I said, companies that cost about $10 that you could buy one share share of, and they pay like 8% back of all their profits to the shareholders, or 10% back of their profits to the shareholders. And a shareholder is somebody who owns the stock. Now, if you buy one share, even if it's one share of a company, they are obligated, from what they said, to give you dividends. Even if it's one share, guys, it doesn't matter how many shares you have. As long as you have shares in that company, you will be getting a dividend until further notice. Now, guys, this is exactly what I'm talking about right here. If you click on track your dividends, guys, I will leave a link down below for trackyourdividends.com, and this will, track all of your dividends, exactly what it is. Listen, this is what I mean by get money and invest it so that you can collect passive income. Get money, buy income. That's all it means. You want to take a certain percentage of what you make every single month and put it into something that's going to be yielding you, or in other terms, paying you something back for that investment. I'll break you down all these. The bottom three is just my retirement, but the top three is what I hold in my Robinhood that you guys see every 2 weeks. So we have Apple right here. I have 10.14 shares, actually 11. I forgot to update this, but right here, annual income, it shows that I make $8.31 off of owning 11 shares, guys. Now, this money right here, $8.31, I don't do a damn thing for. Like, it just comes in every 3 months whenever Apple is going to get ready to pay out the dividends to its shareholders. And below it, I have CVS, 14.51 shares, $29 a year that they have to pay me. I wouldn't say have to, but they are obligated to. Since I am a shareholder, they need to pay me $30, I would say. Store Capital, this is a REIT, which is a real estate investment trust, and they pay me $88 per year, guys. And VNQ pays me $38, VU pays me $16, VTI pays me $8.34. And as you can see at the top, I make $188 off of my investments that I make passively. And if we divide that by 12, you could do the math, and that's how much I get paid every single month. Like, this is what I mean by get money, buy income. Once you get the money, doesn't matter how you get it, then you want to put that money into assets, into stocks, something that's going to pay you back money. That's what an asset is, guys. And you want to make this annual income keep on growing day after day after day. Now, in some cases where, the company, you don't even have to put more money into it. Once you put, let's just say $10,000 into a certain company and they're growing their dividends, that means you don't have to put any more money into it, and your annual income will continue to grow because they're going to increase their dividends. So essentially, once you put in that initial investments, you get paid, and then they raise the payments over time if they're profitable and if they're, being a really good company and they're making lots of profit. So this is what I mean. Like, it's very simple. You don't even really have to think about it. These are no-brainers. Apple, we all know Apple. We all know CVS. This is the S&P 500. Like, this stuff, like, it's so easy, guys. That's why I encourage y'all to, don't spend money on some dumb designer stuff. Don't spend money on no brand new car. Like, we could all live lower than what we make, and we can invest that money into stuff that's going to be paying back some money in the future. Like, but all this money right here, I don't need it. So what do I do when I don't need the money that is being paid out to me? I just reinvest it back into the company and buy more shares. And when we get more shares, you know what that means? That's more annual income. That's more money passively that's getting paid out to me. So, guys, it's a no-brainer. You guys should be doing this. This is just like, I can't even imagine me not doing this, especially if you know. So if you don't know, maybe that's one thing, but eventually over time you will find out to know that companies make tons and tons and tons of money, and sometimes they don't even know what to do with it. So they have to pay their shareholders a dividend for essentially holding the stock. So it's like a thank you for holding the stock and investing with us. So we're going to give you back some of the profits. It's dividing the ends of what they make. So guys, thank you guys for tuning in. Please, if you haven't already, hit the like button and subscribe. I will see you guys in the next video where I'm going to show you my updated portfolio. And guess what? Stay tuned, because I think I might be investing a lot of money in the next coming weeks into a certain couple of stocks. So you want to be there for that. Turn on the notification bell so you don't miss that video. Thank you guys so much, and peace out.